Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 4th of September 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at the overnight changes and price moves to be aware of. And for a holiday session as far as the US was concerned, a pretty active one, I have to say, yesterday. The big movement on the day, or the most notable movement on the day among the majors, the downside in cable, or the pound sterling overall, sterling falling by 0.67%. Against the US dollar, and that of course was on weaker economic data that we saw out of the UK yesterday. But going in the opposite direction, the Australian dollar clawing back some of its recent gains, rallying by 0.62% against the US currency. Whether those gains were real or just temporary with the US out of commission yesterday remains to be seen. Nonetheless, the Australian dollar on the front foot at least to start the day. Mexican peso, however, was down against the dollar, down by 0.69%, and the Brazilian real fell by 1.86% against the US currency. Another emerging market currency feeling the heat once more was the South African rand, down by 1.21%. Dollar index for its part up by around 0.18% to trade at 95.22 shortly before we recorded the video. Okay then, what's on the calendar? Events that may move the markets today. A pretty busy calendar, to be fair. We've already had current account balance data and the RBA interest rate decision out of Australia, and we'll look at the interest rate decision momentarily. The current account balance data for Australia, not too clever, but as we saw, the currency has shrugged off any negativity in the short term. To come then at 7 a.m. GMT this morning, we'll have unemployment data out of Spain for August, and that'll be followed at 8:30 by PMI construction data for August 2. Obviously, it was manufacturing PMI data that disappointed the markets yesterday as far as sterling was concerned. Is there any better news from construction figures today? At 9 a.m. we'll have producer price index data out of the Eurozone for the month of July. And then at 9:30 GMT, the Reserve Bank of Australia's Governor Philip Lowe will give us the first of today's central bank speeches. At 12:15 we'll have the inflation report hearings in Parliament, and we'll hear more about that momentarily. Market manufacturing data from Canada for the month of August will be due out at 13:30 GMT, and that's followed at 13:45 by similar data from the US, and both those figures for the month of August. And then at 1400 we'll also have the ISM manufacturing PMI. It'll be interesting to see if this key US figure has followed the Philly and Richmond Fed surveys recently, which showed a weaker growth in manufacturing, or whether there's going to be some further divergence here. At 1400 we'll also have construction spending data out of the US for the month of July, and then we'll have the second of the day's central bank speeches with the Fed member Evans, I should say, speaking then. Bill auctions at 15:30 in the US, and then jump forward to 19:30 for total vehicle sales data for August out of the USA. And at 23:30, if you're still in the market, you can see the AIG Performance of Services Index for August out of Australia. Okay then, breaking news and comment that's caught my eye overnight. And first of all, the Reserve Bank of Australia has kept rates on hold in the country as inflation remains subdued. This is the 25th month in a row that interest rates have stayed at 1.5% in Australia. Remember, the last move the RBA made just over 2 years ago was to cut rates from 1.75%. Staying with central banks, the Bank of England Governor Mark Carney will face UK lawmakers today as he updates a committee of MPs on UK inflation and the Bank of England's outlook, and will doubtless also be probed about his intentions as regards to honouring the rest of his contract or leaving his position early. Argentina has vowed to eliminate its fiscal deficit, has imposed a tax on exports, and introduced other austerity measures in order to try and stem the Argentinian peso's fall, and to appease the IMF to persuade them to pursue an early distribution of this $50 billion bailout that they've been promised. Okay then, food for thought, something to take away with you into the trading day and beyond. Why not think about this? Sterling fell yesterday on weaker manufacturing PMI data, which was seen as a consequence of Brexit uncertainty by the market. The UK Parliament returns to work today after its summer recess, and Brexit will be high on its agenda. The timeline opposite shows key dates in the separation process, and it's a pretty clear run into the end of the year and beyond. EU leaders meeting on the 20th of September, the Conservative Party conference on the 30th of September, and we progress through to October and November thereafter. But probably worth keeping a copy of this timeline, as obviously these are all important dates for with likely ramifications for the price action in sterling. Okay, please take a moment to read this risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representative, and do take a moment please to read this risk warning thoroughly. Thank you for your time.